Welcome to Season 2 of the Crypto Pulse podcast, your ultimate guide to the world of crypto, Bitcoin, and world economics. We're here to guide you through the crypto universe with thought-provoking topics, in-depth knowledge, and information to help you make informed decisions. We'll also be interviewing some of the best minds in the industry, such as CEOs of crypto projects, traders, economists, authors, and development teams from around the globe. And now for the episode.
This episode is brought to you by Yield App, and daily compounding interest on your digital assets with its intuitive web platform and their newly launched mobile app, which is available for download on both iOS and Android. Plus, don't forget to refer your friends to earn extra rewards. Visit yield.app for more information. Hello and welcome back to the Blithering British Bitcoin and Crypto podcast, where we discuss the latest British balls ups in the crypto space and beyond. Ben, great to see you.
Oh, it's very good. You sounded like one of those old BBC newsreaders. That was great.
Yeah, I wrote that intro this morning and thought I'd surprise you and our listeners. This is Crypto Pulse, just in case you're listening in the car and you think, what on earth has just come onto my speakers? So welcome back to the Crypto Pulse podcast, of course.
Yeah, it was good. Thanks for that. It was a great way to wake up on a Friday morning. Yeah, what an interesting week it's been in British politics.
Yes, it has been a blithering balls up, hasn't it, to say the least. So before we get into that, maybe we just have a little chat about what's been going on in the market. It's been quite boring in terms of price action, but there's lots of macro stuff going on, which is really the main focus of today's show.
Yeah, I mean, the macro backdrop isn't improving, sadly. The Fed are poised for a 0.75% interest rate hike at the next meeting. They're talking about how inflation is wildly out of control and they're going to need to probably take more extreme action to sort of cool things down. It's being reflected over here in the UK as well. I think we're forecast to hit something like 11% inflation by October. And no sign of that slowing, unfortunately.
Yeah, unfortunately not. So that CPI announcements could be very telling for the price of Bitcoin and, of course, all the other cryptos that we have our BDIs on. So, yeah, I mean, we had a bit of a pump yesterday, though. So today is Friday, the 8th of July. This episode goes out on Saturday, the 9th of July. But we've had a little bit of a pump, which did surprise me. Personally, I don't trust it. I kind of think we're going to definitely be visiting south of 20 again, but that's just my opinion based upon what I'm seeing in the macro environment.
Yeah, definitely. I mean, I think, you know, as they say, nothing moves downwards in a straight line. And I think what we're seeing now is probably a bit of a bounce. I think the really key thing, if you're looking at TA, is that we are currently trading under the 200-day moving average. Typically, whenever Bitcoin has done that, it's wicked down underneath it, but it's always reclaimed it. Even in bear markets, you know, we had the COVID capitulation and we wicked way under, but reclaimed it within the space of a few weeks. Now, what we're looking at here might, if you were going purely off the technicals, is an underside retest of that 200-day moving average. And if it is an underside retest, then that would signify something very bearish painted against the current macro backdrop. You know, we could be looking at much lower prices. I think, honestly, based on the fact that we've ranged in here now since really the beginning of June. We sort of wicked down to 20,000 on the 15th of June. Obviously, we're at the 9th of July now, so we're closing in on nearly 4 weeks. It does seem like there's a lot of buying support here. Volume isn't great across all of the exchanges, so it does look to be potentially reaccumulation, so people buying at these prices because, of course, This is the top of the previous cycle. I think, as we've said on the show before, the strategy which we're looking at is we're choosing the range in which we want to be acquiring Bitcoin and other cryptos, and we will continue to dollar cost average providing we're in that range. So yeah, for me, this sort of like 20,000 area is kind of the top of that range. But I think we'll probably be accumulating all the way down to probably something like $12,000 if we ever get there. I think the biggest mistake that people make when they start start dollar cost averaging, or they want to enter a position, is that they're waiting too long for lower prices. And it's kind of the inverse of what we experience when we're in that major euphoria phase, right? You know, prices are sky high and people are buying in, expecting it to continue to run. And actually, when the sentiment is more bearish, people, you know, are typically expecting better entry points, and very, very often they'll be missed. So our strategy, as I say, is just to pick a range in which we want to dollar cost average in, and do that now over the next 18 to 24 months. And I think, you know, that's probably the safest bet, especially because, you know, we say all the time, we're not really day traders. You know, we kind of understand looking at charts, and we can draw in support lines and understand moving averages. But, you know, I think the conditions at the moment really are just for the pros. You know, if you want to be doing intraday trading, then you really, really need to know what you're doing, especially if you're using leverage. So for us, we're playing it safe. But of course, you know, it depends on your risk appetite and your trading knowledge.
Absolutely. I just keep maintaining what a great place to buy Bitcoin at right now. If you're looking for 5 to 10 years, you know, what did Michael Saylor say? That nobody's lost any money buying and holding Bitcoin for more than 4 years. So just have a little think about that. It's not advice, but more and more people at the minute are starting to ask me, should they buy in? You know, people are thinking this is the bottom. They're like, what are you doing? What do you think you should do? I'm like, well, it depends. You've got to make your own decisions. Listen to our show. Listen to other YouTubers if you need to. But ultimately, you've got to decide for yourself what you're going to do. And, you know, it depends how much cash availability you have. So yeah,
definitely. And I think you have to choose a strategy that works for you, that's within your risk tolerance. I've spoken to people that have mentioned things like the stock to flow model and the logarithmic regression curve model, and all of these different things that have been in place, that, you know, some of the big influencers have used to predict where Bitcoin is going, in air quotes. And I think what you have to expect is that all of the models will break. You know, we didn't get the blow off top during the previous bull market, which everybody expected that we would get around September. They thought we'd hit that 100K point, and that would be sort of like the top of that cycle. It didn't happen. Actually, what we ended up was closer to a double top before we've now pulled back almost 60-70%. So take anything you hear and read with a pinch of salt. Even if you're watching things like Bloomberg or, you know, any of the major news channels, when these experts come on, you know, just take it with a pinch of salt. These people are, you know, they're just people, just human beings with feelings and opinions. You have to just sort of figure out what works for you.
Very wise words. Very wise words. So wise, maybe one day you should run for leader of our country.
Well, I mean, apparently there's an opening.
Apparently so. Teed you up nicely for our next segment of the show there.
Yeah, that was a great link. Yeah, no, well, what a week it's been in British politics. I think it's been defined as the most electric couple of days in politics since the Thatcher days. And I apologise to any of our American listeners, because today's show is going to be pretty British centric, just because there's so much going on here and lots to talk about. But I've been following the news really closely, because it has been better than any sort of HBO series I've ever watched.
I asked you whether it was better than Love Island, and you said it was. So there you go. I've outed your guilty pleasure now.
You have. I know. It is my guilty pleasure. It's something about. Yeah,
maybe we should do a crypto Love Island, and we could present it.
I'm all for it. But yes, to answer your question, it is better than Love Island. It has been much more entertaining because it's real life. It's actually been more. If I had to liken it to anything, I'd probably say it was more akin to Game of Thrones this week, because it's, you know, all these people that are just pitching for the top spot and trying to get Boris out of his premiership. But it's it's been interesting. Of course, we had Rishi Sunak, who was the Chancellor of the Exchequer. He resigned earlier this week, along with our health secretary. I mean, these are the two sort of biggest cabinet positions, and really, you know, it sort of was the end of a long string of scandals for Boris. There was another allegation that's recently been made, which kind of brought his judgment into question. And I think over the course of the week, lost something like 59 ministers, and eventually had to concede. And yesterday he resigned. But the reason we're talking about this is because Rishi Sunak, as the Chancellor of the Exchequer here in the UK, was very, very pro crypto. He was a massive crypto advocate, and only last week he was touting crypto's benefits at the British Chamber of Commerce annual conference. Some might also remember that a few months ago, Rishi asked the Royal Mint to create its own NFT, which is still being issued in the summer, but that was to showcase a forward-looking approach towards crypto assets. But it's an interesting time, because obviously anytime the Chancellor changes, whoever comes in brings brand new policies with them. And we're yet to see what Nadhim Zahawi has got in store for the country.
Will he stay as Chancellor now? Or is that when the next Prime Minister comes in, or would they have another reshuffle? I have no idea whether that's policy to do that or not.
Well, it's been really interesting because Boris filled the position of Chancellor really quickly. So he put Nadhim in place. And Nadhim and Boris have been close friends for about 30 years. The pressure was mounting on Boris. I think there was a group of top cabinet ministers that went to number 10 to gently sort of say to Boris, look, mate, the gig is up. You need to get out. You've lost the party support. You've lost the public support, and we need a new leader. Nadhim actually was among that group of cabinet ministers. So he'd been given one of the top jobs in the country by Boris, and then 24 hours later was knocking at his door to tell him to quit. So I don't know is the answer. Nadhim has been doing the media rounds and saying that he felt a duty to his country, at a time where inflation, cost of living crisis is really hurting people. He said that to leave that position open without somebody steering the ship was just a terrible idea. So who knows? I think he's stepped in just to fill for now, but there's every chance that with a brand new Conservative leader and Prime Minister that there's a full cabinet reshuffle and somebody else does that job.
It's one of the downfalls of a democracy, and also a dysfunctional government, or a dysfunctional leader, and therefore a dysfunctional government, because you can have these policies in place in this direction, and unlike a corporation, you can then change direction and change strategy on things. And if we end up having a general election and the Labour Party win that, then we've got a whole other mindset and approach to crypto and blockchain in the UK. And what I really hope is that I would love to see our country to be a real tech hub for this. I think I know we slate the government quite a lot because we talk about CBDCs and like some of the dangers around that. But, we spoke to Sergio from Lago Finance a couple of days ago, which that episode came out yesterday, actually. So listen to that if you haven't. But he made some points about the fact that, super fast blockchains will revolutionize the economic system for people across the world. And it just made me think that if CBDCs are used for good, and we have our privacy and there are some checks and balances in place, that this stuff could be really good for the general population. And the UK, quite frankly, needs something to hang its hat on now, because I'm not sure after Brexit and after the shambles that we've just seen over, probably not the last few weeks, but the last few years, and COVID and whatnot, we need something to aim for. Our country needs to be recognised for something. Yeah. And two things that the UK has been excellent at in terms of the rest of the world is finance and legal. And I would love to see some really positive stuff coming out of the government, and some proper funding for entrepreneurs. And a really good framework that businesses can set up here, and sensible tax regimes as well. I'm not about zero tax for billionaires and enormous corporations. I'm about a low tax system to attract the right talent into the country, because this sector is going to boom. And I think for the sake of the UK economy and the people coming into the workforce, we need strong leadership, and we need a strong set of ideas, and they need to be well executed. So fingers crossed this change can be good, but with any change comes a massive interruption, and that's that's kind of the negative side of things, I guess.
Yeah, absolutely. I mean, you talk about interruption, and I think the concern now is that with another party leader competition, which is going to take up the rest of the summer and probably into the early autumn, we've got 59 ministers that are missing in action. I heard yesterday that there's not a single minister currently running the education department in the UK, and Boris is struggling to fill the position. So we're in a period of just sort of like the blind leading the blind at the moment. So I'm hoping that we find a new leader quickly, and the status quo can be resumed, because I think there is an opportunity in this country for us to find something new. You know, as you say, we've always been really well known for financial services, and that was sort of ushered in by the Thatcher period. And we need something desperately now. You know, I think especially as we sort of untied ourselves from the EU, our exports are suffering. I think we're pretty desperate, but I'm optimistic. I think over a 10-year period and with the right government, I think we can find our feet. What that looks like, I don't know, but I hope that we can play a part in the development of Web3.
Yeah, it's going to revolutionize how the world works, and there's going to be a lot of good that comes from it. And we're quite cautious with new technology, because you can always have unintended consequences, and we're cynical about CBDCs, but that's good, because with that cynicism, then you can then have some kind of system that has some checks and balances to make sure that power hungry politicians and billionaires don't start ruling the world more than they are already. So
right,
it's gonna be interesting for sure. I'd like to. I mean, we did say a few weeks ago we were going to try and get somebody from the UK government on the show to talk about what's happening. Matt Hancock's actually been very vocal about crypto, hasn't he? I don't really want to interview Matt Hancock particularly, but maybe when the government settles down a bit, then we'll be able to get a representative from the UK government to come on and talk about how they see the UK being a world leader. Because to me, it's still unclear how we're doing this. It's just all hot air. So
absolutely, yeah, I think we definitely will. It would be interesting to sort of get their perspective on things. And we have so many questions, which I'm sure lots of our listeners do too, about how CBDCs are going to be implemented, and are they going to be safe and secure? But time will tell.
I want to say a big thank you to YieldApp for sponsoring this podcast. Now, we may be in the midst of a bear market, but that's no reason to stop earning on your digital assets. YieldApp allows you to earn daily compounding interest on the biggest digital assets at the click of a button. YieldApp is a licensed fintech company built by a team with a strong background in traditional finance. YieldApp offers instant asset conversions, fiat on-ramp, auto compounding, and security features such as activity log, transaction history, and more. Simply deposit your digital assets and click to start earning daily rewards. And you can earn up to 1,000 of their native token, YLD, by referring your friends to YieldApp. You will also automatically join their monthly referral competition for a chance to win massive prizes. So moving on to our next topic, again, we've got a very British theme on the show today. So this is discussing how many people have invested in crypto in the UK. So research commissioned by HMRC, which is HM Revenue and Customs for our non-UK listeners. So they're the people that we pay all our taxes to, have found about 6.7 million adults, which is around 10% of UK citizens, have owned or bought crypto assets. According to its results, an average crypto asset holder in the UK would be young, male, and a hodler. Okay, no surprise there. 55% of those surveys have never sold any of their crypto assets, and only 7% are currently holding more than 5,000 in value, which I found really interesting. 68% of owners most frequently acquire crypto from centralized exchanges. I thought it would be higher than that, actually. And 81% use these exchanges to sell or exchange their assets. The majority of owners reported making a profit, around 63%, over the past year when disposing of crypto assets. 14% claim they've made a loss. Well, I think that's going to change in their next batch of research if people don't HODL and sell and capitulate. Similarly, 14% revealed they broke even. So more and more businesses, big and small, are including crypto as a payment option. Most recently, a cafe and indoor houseplant shop in Metfield became the first business in East Anglia to accept Bitcoin payments. And apps like BitPay allow users to pay for certain UK merchants like DoorDash, Lush, Uber Eats. And it was only this February that CoinJar partnered with MasterCard on crypto to GBP debit cards. So there's certainly lots of businesses that are coming to the forefront and allowing SMEs, which is really great, to accept crypto as payments.
Interesting. Yeah, I actually read a statistic within this study about the mean age of crypto investors in the UK, and they are largely people under the age of 25. So I think that counts as millennials and Gen Z. I sort of think about the generation below Gen Z and what adoption is going to be like for them. And I kind of feel like crypto and blockchain as an emerging technology is going to be something which really speaks to those younger generations. So that adoption curve, I think, is only going to grow as those generations come of age. So yeah, it's interesting to see. It was actually way more than I expected. 6.7 million adults, which is about 10% of the UK, is a significant number.
Yeah, it is. It is way more. That's still a large proportion of the population, given that we're so early on in the adoption process. I would imagine a lot of people it depends how they're getting that data, and I guess probably from centralized exchanges. And there will be people that have just put a few £100 in and set something up to get a feel for it and have not taken it too seriously. But yeah, we'll see how that number grows, and if the UK can really get their act together, then hopefully we'll see that number increase.
So from HMRC to another great British institute, the British Army. This is probably. We weren't sure if we were going to put this into the weird world of crypto segment, honestly, because it's a very, very strange story. So for those of you who follow things on Twitter, you might have seen last week that the British Army's YouTube and Twitter accounts got hacked and used to promote NFTs. So over the weekend, the British Army's official accounts were compromised, with hackers using the accounts to promote various different NFT projects. Hackers initially changed the account's profile picture, banner, and description to promote Bapes Clan NFT, a collection which depicts cartoon apes face on. Those in control of the account later promoted another collection called The Possessed. On YouTube, the Army's channel had been changed to look like a page for ARK Invest, which is obviously a real crypto investment company. And videos were posted promoting cryptocurrencies, featuring repurposed old footage of Elon Musk, Jack Dorsey, and ARK CEO Cathy Wood, discussing cryptocurrency and featuring an overlay promoting double your money with Bitcoin and Ethereum scams. So the Army eventually did regain control over both accounts by the Sunday evening, tweeting, "Apologies for the temporary interruption to our feed. We will conduct a full investigation and learn from this instance. Thanks for following us, and normal service will now resume."
That could have been said in the same voice as my introduction to this show, I think.
It could have. Yeah, it could. It was a very, very British apology. I have to say, this is concerning, because the British Army are arguably in charge of our national security. I mean, they actually did a campaign a few years ago saying switch or retrain to cyber. I think this was at the start of the COVID pandemic, and the adverts were a bit tasteless. They were saying, if you're a dancer or an actor or someone that works in the creative sector, which obviously was decimated by COVID, come and work for the British Army and retrain for cyber. And I can only assume that they didn't get anyone sign up, because to have their Twitter, no one any good anyway. No one any good. Yeah, well, this is a problem when you put dancers in charge of national security, your cyber security. It's never going to end well. So yeah, I don't know how this has happened. I mean, to happen to the Twitter and their YouTube account suggests to me that they don't even have the bare minimum security set up for their accounts, which is worrying. I would say.
Yeah, I don't really know how this would have happened. I guess it would have been like no two-factor authentication setup, which you thought would be compulsory for something like that, or someone's accessed an email or a telephone number or something. So, yeah, I'm sure this won't be the last great institution to be hacked in this way and for people to take advantage of it. I wonder how much these scammers like benefited financially from doing this, or whether it was a bit of an FU or just some kind of high that they got from doing it.
I mean, it's a major publicity stunt, if nothing else.
Sure.
The fact that they managed to hack the British Army's social accounts. I hope that I really hope that it was a very sophisticated hack and it wasn't just sort of like they guessed the password. I kind of have visions.
Password 1, 2, 3.
I kind of have visions now of them down at the nuclear, down at Trident, going, shit, they've guessed our password, and they're updating it from password 1, 2, 3.
Well, so talking about that subject, you made a really good point yesterday. So the day before we record, we always go through like the topics we want to discuss with our producer, Cal, who does an amazing job in putting all of this together for us. And you made the point. It's like, imagine if somebody had put something really detrimental about, like nuking another country or like there was some like major national security alert. Like that could have caused enormous global repercussions. I mean, well, we're Ukraine are at war with Russia at the moment. It only would have taken a tweet from the British Army to say that we've launched a nuclear weapon at Moscow. I mean, you could cause some real serious trouble. But I think we said this also back, you might remember 2 years ago, there was also like a flurry of hacks on Twitter for some major people. I think Bill Gates was hacked. I think there were some other major world leaders that got hacked. And it was all that. The guy in India as well. We covered that in the Weird World of Crypto, didn't we?
Yeah. So, I mean, I feel like these institutions and high-profile individuals really need to sort their security out. The fact that some of these people are actually writing legislation around innovation and Web3, but don't know how to set up two-factor authentication on their accounts is concerning.
Yeah, so we interviewed Leemon Bed from Hedera yesterday, which was an incredible interview. And we were talking about...
What guy?
Oh my God. So this is going to be one of our most popular episodes, probably of the summer, I would think. I mean, I'm still digesting a lot of what he said and sort of meditating on some of that to a certain extent. But he mentioned about, securing wallets and stuff. And a lot of people don't want to store their own keys. They want to have a set of trusted parties that can partake in that process. So you have to listen to that. It's coming out on something like the 17th or 18th of July. But if you subscribe, you'll get a notification when it's live. But my point is that I think there needs to be more as we move into Web3 and decentralization. There needs to be a better way of securing and recovering accounts, and I think that some of these blockchain solutions can help with doing that. And I think these big institutions are going to need that moving forward, because right now it's not good enough.
Yeah, you're totally right. There was another story which came out of China last week. The private data for 1 billion citizens had been leaked because one of the engineers had written a blog where he had copy and pasted the screenshot of the credentials into his blog. He was explaining the process of how to do something with a database, and rather than use test data, he actually used the live credentials for the database in his blog. And over 1 billion records were leaked. And this is one of the major concerns that we have, isn't it? This is the problem with some of these centralized organizations having so much data, and especially when you're talking about things like crypto assets, because if the government had records of who owns Bitcoin and that then leaked, I mean, it's a major security risk. So I think the faster we can sort of usher in decentralization and data sovereignty, I think the better.
Yeah, definitely. It's coming, which is good. So if that wasn't weird enough, I think it's time to move on to our Weird World of Crypto segment for today.
Yeah. I just despair on this one. So
Despair is a good emotion for this story.
Yeah, the greed of people will never fail to amaze me. So a couple of weeks ago on the show, we spoke about the Terra Lunar collapse, where the stablecoin depegged and the price of Lunar went from something like $120 down to 1,000th of a cent. It all happened very, very quickly and was part of the system trying to rebalance itself. Now, Korean crypto startup Uprise lost virtually all of its clients' funds by shorting Lunar during its price crash and getting caught on the bounces. So the Korean firm billed itself as using artificial intelligence enabled automatic trading strategies to trade crypto on behalf of its clients. This trading desk is one half of the company's service called HODL, whilst the other half is a global exchange traded funds platform called Iruda. So under HODL, Uprise took custodied crypto assets from customers and traded them in the cryptocurrency futures market. And Uprise's AI-enabled trading technology was supposed to minimize the risk associated with leveraged crypto trading. However, the system couldn't prevent the firm from being liquidated out of its Lunar futures trading position and lost 26.7 billion won, which sounds like a lot, but it's actually only $20 million. I mean, it's still people's money.
Yeah.
It's still a lot in the process. So this happened during the Lunar price crash, and it was reportedly because they were shorting Lunar whilst the price was plummeting, but then got caught out on the very sudden price pumps along the way, which we knew was happening, right? I mean, the price was obviously trending down, but every so often you'd get these sort of 100% pumps or 200% pumps, and then it would sort of continue back onto its journey down to nearly nothing.
I bought some at nearly nothing, and I've still got them, and they're still worth nearly nothing.
Well, that's
I
good.
just thought it might be a meme one day.
Just to be part of the culture, right?
Yeah, I feel a bit dirty now. I've admitted that. Really, maybe I should donate them to charity or something.
Maybe you should. Maybe you should. But in this instance, the lost funds represent about 99% of the funds that Uprise were managing on behalf of its customers, and these clients are high net worth individuals, corporate entities, according to the report. So Uprise also reportedly lost 3 million of its own funds.
Oopsie. Jesus Christ.
So they put out a statement. It's true that damage to customer assets has occurred due to the unexpected great volatility in the market. We plan to finalise the report on the virtual asset business soon, said a spokesperson. So yeah, this to me, I think they've used some sort of, I think they're trying to use the AI system as a bit of a cop-out here. This to me strikes me as human greed. I think they've looked at the situation. They've gone, this is an excellent opportunity to short it. We'll use all of the client's assets. We'll use maybe 3 million of our own. In fact, I probably suspect they used 20 million of the client's assets, lost all of that, and then thought, let's try and win it all back in one trade with a highly...
Don't worry about it, Jim. We'll just stick our own 3 million in, and we'll just
leverage up and win it all back in one go.
We're only doing 10x leverage. If we crank that up to 30 or 50, then it'll be fine.
That's a great idea.
I mean, were they drunk? Are they stupid? I mean,
it's not even funny.
It's not funny. No, it's not. Yeah, it's not funny. What can we learn from this? That humans are stupid sometimes? Yes.
Yeah. I just have visions of them sat behind their computer just, going, oh, this would be a great idea. Let's all do it. And they're all sort of nodding along going, yeah, go on, let's do it. 10x leverage on all the clients' funds. We'll make 200 million. Come on, let's go. And then realizing that they've been liquidated in a couple of hours.
It's very Wolf of Wall Street, isn't it? I just get visions of this 80s style like trading desk where people are using substances and kind of going out for champagne lunches and stuff like that.
Probably.
But it's the modern day version of that, really. Utter
Probably. Yeah, well, it is the Wild West, I think. I don't think it's the last we'll see of that kind of thing until strong regulation comes into the space.
Well, this is where we need regulation. We need regulation for this kind of stuff. We can't just operate in this environment forever because it just won't grow. So there is a case for some regulation for sure. But regulation to persecute people that are just doing things that are significantly putting other people at risk, and to stop criminal activity, not to KYC the hell out of everybody and then have an issue where, you know, centralized data is collected, then that's leaked, and, you know, people in political environments that are a little bit more sensitive get into hot water for different things. That's not what we want to see, but see how this unravels. Honestly, every week we just seem to talk about regulation all the time, but you know, hopefully once we've got some framework, then it'll be good for the growth of this space.
And we can stop
general.
talking about it. Yeah.
We can stop talking about it. So that's all we've got for this week. Make sure you subscribe if you haven't already. We've got, like I say, we've got some great interviews coming up. The interview from Lehman Baird at Hedera is, well, definitely one of my favorites we've done in months, actually. So that's going to be great. And we've got some big exchanges coming on the show as well. We've got Huobi. Is that how you say it? I should probably check before they come on.
Huobi.
We've got Bybit coming on. Yeah, we've got some of the big exchanges coming on to talk about how they see the market going and the growth of exchanges across the world. So thanks again, and we'll catch you again next week.
Yes, indeed.
We hope you enjoyed this episode. It would mean the world to us if you could leave a review wherever you're listening. This really does help and allows other people to find us online. You can keep up to date with new releases of the podcast by subscribing and following us on Twitter or Instagram for the latest crypto-related news. Information provided by Crypto Pulse via this podcast, website, social media channels, and any other medium does not constitute financial advice, investment recommendations, or any other type of advice whatsoever. The Crypto Pulse team are not professional financial advisors. Trading and purchasing cryptocurrencies do carry risks, and anybody wishing to partake in such activities should seek professional advice.